Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now, it was a grim day in Chinese financial markets. The headline was, of course, the sharp fall across equity market indices as China imposed COVID restrictions across several major cities amid a new infection wave. The concern, of course, was the unclear nature of how much of an economic drag these measures could have on growth and whether policy easing can indeed help offset this. Now, the most eye-catching move was in the Hang Seng Index, which was down almost 5% on the day, though the technology sector fell a little bit more than that. In terms of direction from here, though, we believe a focus on three signposts can help guide investors. First is the pace of new COVID cases themselves, and that can be one indicator of the potential length and intensity of any restrictions on activity. Second, of course, is equity market technicals, and specifically we'd watch whether the Hang Seng is able to keep its nose above the 200-month moving average on a monthly close basis. And third, of course, is how central bank and government spending policy reacts and the extent to which markets believe it's able to lean against the economic impact of the COVID measures themselves. Now, big focus, of course, on equity markets, but today I also want to talk about the Chinese renminbi, as even here some weakness was visible after yesterday's risk-off move across Chinese assets. Now, the immediate trigger for that CNY weakness was undoubtedly similar to that of equities, but for the currency, there are three other factors we believe are also important to watch from a more overarching basis. First is that the CNY's resilience in recent months has come in a market where most other currencies buckled in the face of US dollar gains. And this has meant that the CFETS trade-weighted CNY has strengthened sharply over the past year. Now, policymakers keen on supporting growth, though, would usually favor less currency strength. And this, to an extent, may explain why the Chinese central bank has had a recent bias for setting the policy midpoint a little bit weaker than market expectations on average in recent weeks. A second driver of the CNY is its yield advantage, with the yield on the 10-year Chinese government bond being well over 3% at many points last year versus well below 1.5% for the US government bond equivalent. However, that yield advantage has clearly been narrowing as the 10-year government bond yield gradually trends lower, which I can see is about 2.78% currently, if I'll take a look at my screen, while the US government bond yield moves in the opposite direction and continues to climb at about 2.13% currently. This gap, of course, could narrow further. And third, of course, is China's trade and investment flows. These remain very much in surplus, and they remain a key supportive factor for the CNY. So longer term, we do expect continued Chinese renminbi resilience once some of the immediate challenges are overcome, especially if the US dollar peaks as we expect. On a shorter horizon, though, the tradable USD-CNH pair is approaching some interesting technical levels after recent moves. Now, technical indicators do argue the pair is overbought after its rise recently, and it is approaching key technical resistance around 6.41. Now, some consolidation is likely around here, and a turn back lower is possible should some of the immediate concerns fade. However, that 6.41 level is key, as a break above this does mean a move to 6.45 is likely. So, while there's likely to be a lot of focus on the Fed decision in the coming days, we keep a close watch on Chinese markets and renminbi as well as opportunities emerge. But we'll take a pause here. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening. We wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.